Hi, I'm Keith McCullough. I'm the founder and CEO of Hedgeye Risk Management, and today I wanted to take some time to just share with you what is real-time alerts. I want to talk about what the product is, why I use it the way that I use it, and finally I want to get into some details on how you actually implement it yourself. Now, on the what, it's really simple. It's a timing product. It's a risk management signaling product. This is what I would do in this security right here, right now, time-stamped. That's it. It's not a portfolio. I don't run a portfolio. That would be a conflict of interest at a bare minimum, which you know. I'm not one of these people who believes that you can run around and push your own book and try to capitalize on at least being positioned ahead of other people. So we give you the signal at the same time that our institutional customers get this signal, which, by the way, is the founding part of our business, over 90% of our revenue. And again, institutional client being defined as paying us $40,000 to $50,000 at a minimum a year, all the way up to $500,000. So again, I do hold myself accountable to giving you the signal when they get the signal, but also not suggesting that I run your portfolio. Again, we'll have signals that are commodities, currencies, bonds, stocks, longs, shorts, on both. And again, if you were to look at this as a portfolio, that'd be completely the wrong way to look at it, of course, because again, currencies move 1% to 2% at a time, whereas stocks can move 5% to 10% at a time. So you wouldn't equally weight it. You would do nothing that is looking like a portfolio. You're getting a real-time signal from a real-time hedge fund manager with a 30-plus person and growing research team, I might add, that's giving me a tremendous amount of input on that. So that's what it is. I mean, it's really simple. It's a timing product. It signals to you probably 6 to 12 times on a busy day. If I'm kind of traveling, seeing institutional customers, you might see something 3 times a day if it's a slow day. So on the why, again, why did I come up with this? Well, really, it comes from where most of our products come from. It's what our institutional customers, very sophisticated investors, want. And they said, look, Keith, I'd love to know why, basically the what and the why, what would you be doing right now? So as opposed to the old Wall Street way where I'd have to pick up the phone and call them all individually, I said, well, why don't I just send them a signal? So again, somebody in Connecticut, somebody in California, somebody in London, somebody in Canada, they all get the same signal at the same time. And then I said to myself, well, why don't I push that to the masses? Why don't I create a price point where they may not get all the detail, and if they call me, I can't pick up the phone, but why don't I give that to them? And that's why I have that product. So again, some people are very sophisticated, trading at home for yourself. Day traders really like this kind of a product. Again, there's a lot of different people who use it for different reasons. Idea generation, at a bare minimum, you're getting really for a very good price what my entire research team thinks, top to bottom and back again. So that's really kind of important to capture all that product really stands for, as opposed to trying to get some kind of like made-up portfolio, which is, of course, what we don't run. Now, some details on the product, how you can use it. Specifically, I just wanted to say that when I actually hit the button, again, it triggers an alert. So you'll get an email that first of all, is already alert on the site. So if you have the site up, you're going to get it faster than the email. Now, some people will say, email. Well, email's slower. I'm like, yeah, it's email. So if you want to have it up on the site in real time, obviously that's the most dynamic place that you're going to get it. But by the time it hits email, it depends on how fast your email is, really, in terms of how fast you're going to get it. And again, I wouldn't get too caught up in terms of the semantics of that timing. You'll also get a short note that tells you the what and the why. So in other words, the what, you'll get the ticker. And the why, it'll usually have 1 sentence, maybe 2 sentences on why. So for example, if we're shorting Nike, I will say Brian McGough doesn't think that the quarter is going to be fantastic or something like that. Brian McGough is obviously a senior research analyst that is also a partner at the firm who's covered Nike for 15 to 20 years. He's actually also worked at the company. So again, it's better than the alternative, and I challenge you to find something that has this much baked underneath the cake. But again, if I were to tell you buy GLD, it's a signal. Again, our macro team currently likes gold. We may not like gold when you read this next year. But the point is, it will tell you why we like gold. We like gold when interest rates are falling and the dollar are falling. So you'll get a little bit of detail on why, and of course, institutional customers are paying for 20, 30-page reports on why, and for me to go into their office to show them our models and explain the history of it all and how we've kind of come to that investment conclusion. So you get a lot for that. And then again, as I pointed out earlier, you're also going to get this at the exact same time as the institutional guys. So we're getting rid of the Goldman huddle. or whatever that was. And again, maybe they didn't have it, maybe they did, but there's a perception out there that Wall Street gives the big guy the call first, when in reality, we think that meritocracy is a better way to do it, which is everybody gets it at the same time, and they can do with it what they will. So really, that's it. That's the product. It's a timing product. It's something that nobody else does. I've time-stamped, and again, we use the word timestamp because that's what the old machine was. When I came into the business, there'd be a black timestamp ticket, and there'd be a red one. And there would actually be a machine that would click it, and you'd say, "Wow, that's where I'm done. I know that price." So then at the end of the day, I can look at all my timestamps and I can say, "Wow, did he make good decisions or did he make bad decisions?" And I make bad decisions. I make a lot of bad decisions, but unequivocally, I don't make a lot of horrendous decisions all the time. I think if you look back across the entire history of the product, and I challenge you to find anyone who would be maybe even dumb enough to try this. I actually have showed every single timestamp since 2008. So again, going through the soup. If you're an investor or an institutional customer or an individual, you can see every single move I've made under every single period of stress, buoyancy, whatever. My birthday, you can see it. That's what I did. It's timestamped. It was either good, bad, or ugly, and that's that. I'm accountable to it 100%. So again, if you have any questions on this, please tweet me at Keith McCullough. I'd love to hear your questions.